business attend the Inc. 500 conference, so what better place to get your small business questions answered? Senior editor Rod Kurtz, a regular on our show, is going to do just that with our panel.
Thanks, JJ. Well, joining me now is Greg Alexander. He is CEO of Sales Benchmark Index, a strategic advisory firm. He's also author of Making the Number, How to Use Sales Benchmarking to Drive Performance. Also joining us today, no stranger to the Inc. 500 conference, Doug Tatum. He is founding chairman of the aptly named LLC, which provides companies with strategic and financial support, two things they definitely need. He's also author of the book No Man's Land. Gentlemen, it's great to see you. This is fun, huh?
Yeah,
thanks for joining us at the conference. You know, one of the things I love about the Inc. 500 is you pack a big room full of hundreds and hundreds of entrepreneurs. They're all in the same room, speaking the same language, and they're looking to tap each other's expertise, and that's why we have you two here today. So we're going to go to some questions from attendees here at the conference to hear what's on their mind, and looking forward to your advice. So let's go to the first question.
Our business is very cyclical, and we have big inflows and outflows of cash. At the end of each quarter, we have a lot more than the $100,000 FDIC insurance. How can I best protect that when the amount is above that $100,000 threshold?
You know, guys, in this economy, this is a great problem to have, but certainly an issue that's on people's minds.
Boy, front page news. I would suggest that the entrepreneur contact their bank and ask them what types of investment accounts they have that are outside of their financial responsibilities or liability. Repos, for example, would be a great place to have their money swept and get a return that's outside of that insurance.
And this is a time you should really be talking to your banker pretty regularly.
Right, and repos might not be the answer they have now, but something to that effect would be, they'll have the answer for that by asking them the question.
Absolutely. Greg, what do you say?
You know, I would say invest in yourself. I mean, there has to be a number of projects inside of your company that, if it was properly funded, would be the next wave of growth for the company. So tap your employees and find out what they're working on and see if you can back some bright ideas.
Absolutely. Let's move on to the next question. We're talking about 401k plans here. Let's listen.
In the current economic disaster, nightmare on Wall Street, how do I protect my employees' 401k plan that I've now implemented?
Well, look, this has been a huge issue, something we're hearing about in the news. People are concerned about their 401ks. What do you tell your employees, and how do you protect their plans? Greg, first to you.
What I would tell them is the basics of diversification. Make sure that each of the asset classes are properly represented, and you do your best to eliminate risk as much as you can through proper allocation.
What do you say, Doug?
Well, I can't add much to that. That is a long-term investment. Those expectations have to be set, and as of today, that market has gone up and down, and there's no way to predict where the low is.
And I think you hit the nail on the head that it is a long-term. You don't need to be panicking. You don't want to pull all your money out. Right. Unless you're approaching retirement, which most people aren't at this point. Yeah. It's better to sort of look at the bigger picture here. Okay, on to the next question.
How far is too far when you're talking to venture capitalists? How much should you disclose? I know that a lot of them will say they don't sign NDAs, and how can you protect the confidentiality of your business when you're speaking about really confidential stuff?
Well, I know a lot of entrepreneurs like to keep it close to the vest, but at some point you have to disclose here. Greg, what do you say?
I would say disclose everything. If you're looking to take investment dollars from an investor, you want a partner. And you don't start a partnership by hiding certain pieces of information, so give them everything they ask for.
That makes sense to me. Doug?
Well, I'm on the board of a venture capital fund, and absolutely, if we sense that the entrepreneur is not sharing with us the details of that business or the potential risks, we're not going to invest.
Now, I'm wondering, I'm sure you guys at this point have been in the position where you are sort of on the other side of the fence as an investor. What do you look for? What would you want to know if I were you with a business idea?
I bet on the person. I look at the person's track record over a number of years, and I look for, periods of sustained success, and that's who I would invest in.
It's interesting you say that, because it seems like it's all about relationships. Yeah. What do you think, Doug?
Well, it starts with the leader, and then it follows very quickly with the ability for them to articulate a succinct value proposition that we can understand, and understand how it can get monetized.
You know, the key word there is succinct. You know, in the halls here, 500.
It's a term we love in television as well.
Yeah. I've had a chance to talk to a lot of entrepreneurs, and you ask them, what do you do? You know, and you're supposed to have that 10-second elevator pitch set up. And some people do it really well, and I get more interested in their businesses, and some people take a little bit longer to answer that, and it gets confusing.
It's funny you mentioned an elevator pitch. We got that coming up later in the show.
Oh,
So
okay,
Doug, real
great.
quick.
Well, I examine our investment committee, and they will make their decision most likely in the first 20, 30 seconds based on the ability to understand.
It's like trying to pitch a music executive when you're trying to break it. All right, on to the next question. Here we go.
In today's economy, it's very difficult to get debt financing or VC money for a company our size, a $5 million company. My question would be, what advice do other entrepreneurs have out there to capture that elusive money that is certainly needed for a small business to continue to grow?
Again, it's all about the money, where to find it, and it's often easy or hard to get, I should say, to spend. So if you're talking to investors, we touched on this a little bit, especially venture capitalists, what do you need to tell them? Greg?
Well, I would try to get them to come to you. You know, if you're going to the venture capitalist, that's a clogged channel. There's a lot of entrepreneurs going to a few people that have a lot of money and pitching their business. So my best advice would be grow a great company and the investors will come to you.
Now, Doug, in this economy, this is tough. People with a lot of money apt to sit on the sidelines right now. How do you, especially in this climate, convince them to give you your money?
Well, I would say that there's a huge amount of private equity and venture capital looking to be deployed. The problem with this issue is that venture capitalists are primarily located on the West Coast.
Okay.
So I think the honest answer to your audience is back what Greg said. I would concentrate on deploying and finding the capital in my business until you get larger. That's a pretty small revenue number in that question. And then private equity will be there, and they'll come find you.
Well, and the question I always ask is, people are sort of always get excited about venture capital, but I'm not sure all companies need it, because keep in mind, you're giving up a portion of your company for this money. So if you can find it from within, like you say, Doug,
well,
that's
absolutely.
often best.
You start these businesses to work for yourself. You wake up one day and find out you got to make them successful for your employees. Do you really want to add an investor constituency to your responsibilities?
Because eventually they want their questions answered.
You're selling your business when you take on outside investors.
All right, Greg, real quick.
I would add to that it takes less investment capital to get a business off the ground these days than ever before. So be smart as to how you subcontract out certain core functions that keep things in a variable expense basis.
Absolutely. Okay, on to the last question here.
What is the future of healthcare costs, and how will it affect small businesses providing healthcare to their employees?
Well, guys, this is a huge issue. I don't know if we can answer it in the few minutes we have here, but it's talking to people here at the conference. I know it's on their minds. Greg, how do you approach it in your company?
Well, I mean, assume it's going up.
Yeah.
The question
One
is
thing is for certain.
Yeah. The question is by how much. So really, I would draw it back to what I said earlier, which is you have to grow a great company and increase the value you're bringing to your clients. And if you do that, you then have the resources to provide greater benefits to your employees.
Doug, read the tea leaves for us.
It's going to go up, and you're going to have to create a way of sharing the cost with your employees.
Yeah.
Absolutely. It's a reality we're all facing now.
All right,
guys. Appreciate all the advice. Good stuff here.
Thanks for having us.
Thank you. All right.